Do you have CashAPP, PayPal, or Venmo? The IRS is coming for your money. But unfortunately, if you're making money from a side hustle, a freelance work, or from a gig, this is going to seriously affect you and your money. And it will affect millions of Americans. If you have a few side hustle and you get paid by PayPal, Venmo, or CashAPP, the IRS is coming for you and your money. If you sold Beyonce or Taylor Swift concert ticket on Ticketmaster or StubHub, you probably get the tax form from the IRS. If you sell stuff from Facebook Marketplace, or if you babysit on the side, you might get audited by the IRS too. Also, if you have a garage sale and you sold over $600 worth of items this year, you will get audited by the IRS too. Why? I'm about to tell you why in this video. So, you are watching the Financial Coffee channel? Let's get into this. The IRS is coming to take your money. How? Let me tell you how. Because I want to warn you about this. I am talking about the new $600 IRS rule. It will take effect this year in 2023. Up to 40 million Americans will be impacted by this rule. But most people don't know it yet. Be ready because starting January 2024, which is less than 3 months from now, the IRS will send you tax document if you have CashAPP, PayPal, or Venmo. It's going to catch a lot of people by surprise. So as a reminder, if you have been using PayPal, CashAPP, or Venmo, make sure to understand your tax situation. Because if this year, 2023, you receive more than $600 of qualified transaction totals app, then the IRS will come knocking on your door. I'm just kidding. They don't have to knock on your door because they have access to all your paycheck and your bank account. But more seriously, you will receive a tax document that is called the 1099-K, which means you will pay taxes on it. Now, let's try to understand what changed. It used to be that you had to receive at least $20,000 in your CashAPP, PayPal, or Venmo in order to pay taxes on it. So, let me break it down for you by giving you an example. Let's assume that you have an Etsy store or an eBay account where you sell some merchandise. Let's also assume that you receive all your payment through CashAPP, Venmo, or PayPal. If you sold more than $600 worth of stuff for this year, you will get a tax form for the IRS. Or let's make it a little bit simpler. Imagine that you had a garage sale and you sold some old furniture for $610 in total. If people who bought your furniture pay you through PayPal, CashAPP, or Venmo, you will have to pay taxes on that. This is a huge change. And I know that for sure, it will shock a lot of people who have a side hustle. So in January, you need to report that properly to IRS. Because if you don't, you have a lot of problems with the IRS. Let's talk about those problems. And there will be so many problems. But I will just point out the most obvious. So this is the first problem that I see happening. Most people will spend more money on the tax preparation fees. Do you use TurboTax or H&R Blocks or an accountant? Because if you do, guess what? Any of those will charge you more by the form, by the schedule, or by the activity. It will cost you more money. You are going to end up paying more money for tax preparation services. If you get a tax document called the 1099-K, your accountant or your software will charge you more. Many innocent Americans, so many innocent taxpayers are going to get hurt. Let me give you an example. Let's say that you sold some old furniture for $610 in total. In this case, you will receive a tax document saying that you have a $610 of taxable income. I can already hear that you only pay taxes on profit that you made, which is a legitimate argument. And to that I will reply, so you sold the furniture for $610, right? But that old furniture probably cost you around $1,244 when it was brand new. Then you sold it for $610, so you lost money on the transaction. And in that situation, you are not going to pay any taxes on that because you only pay taxes on your profit. It sounds easy, right? And it makes a lot of sense, right? But this is my question. Do you have the receipt of when you bought that furniture? Because in this situation, you sold $610 worth of old furniture. If you get audited, the IRS auditor will ask you to provide a receipt for the furniture. If you fail to provide the receipt, then it will look like you got the furniture for free. And that $610 that you made was pure profit. As a result, you have to pay taxes on it. Now you might also ask me, how are you supposed to come up with the receipt for all furniture that you bought several years ago? I have news for you. The IRS is going to say that it's your problem, and they don't care. And with the IRS, you are always guilty until you are proven innocent. That's how it works. If you think that is unfair, that's just the way the system works. You are always guilty until you can prove yourself innocent. If you get an IRS audit, that can go on and on for several months. Even if you are lucky in the end, you still have to suffer the emotional damage and waste of your time with the IRS audit. Trust me, I have been audited by the IRS before. In the end, I got lucky that my paperwork and my receipt were in order. But that audit was painful. I don't wish that on you. It's not cool at all. That whole process was very stressful. I was stressed out because it was hanging all over my head like a dark cloud. IRS agents love to show you that they are in charge. Oh, there's another thing that I want to point out with this new rule. I just called my CPA today, and it's going to cost you an extra $85 to $100. You can also check for yourself with your CPA, and accountant will charge you much more than that. It's inevitable. People are going to make mistakes with the 1099K tax form, and guess what? They will end up paying more taxes than they should. There is one situation that a lot of people will face. The politician and the people in power decide to lower the threshold from $20,000 to $600 because they wanted to go after tax cheat. That was their excuse. This might shock you, but some people support this change. I don't know why they want to give more power to the government. Also, if you have a side hustle, a gig, and you get paid by Venmo, CashAPP, or PayPal, you better not screw this up, because otherwise you are going to get audited by the IRS. If you sell some baby stuff on Facebook Marketplace, or if you babysit on the side, then you better have those receipts ready just in case. If you have a garage sale, then consider asking people to pay you in cash. Also, let's say that your kids sell lemonade, tell them to stop at $599 because that's the maximum for the year. Remember, if you hit the $600 threshold, then you are going to be dealing with the IRS. Okay, just one thing to point out. This new rule, just remember one thing, is only applicable to goods or services that are sold. Therefore, if you are simply just splitting the check at a restaurant, it is not a qualifying transaction. So you'll be good to go in that case for now. If your parents send you money to help you pay for rent, grocery, or whatever, you are good to go. If they send you money for birthday present, graduation gift, it doesn't qualify either. But, and this is very important, make sure that the sender doesn't mess up the categorization when they send the money. What do I mean by that? When you send money to PayPal, CashAPP, or Venmo, they always ask you to identify what the money is being sent for. Basically, they will ask you if the money is for gift, goods, or services. So make sure that you pick the appropriate category. Otherwise, it will trigger a tax form. I'm just trying to give you some way to work around the system, okay? It's not illegal. Another way to get around this is to use a different payment form or a different payment method. So for example, if you have a garage sale and the buyer wants to pay you through PayPal, Venmo, or CashAPP, ask him or her if he can pay you with cash. You could also ask for crypto or Zelle. So Chase QuickPay or Zelle is not considered a third-party transaction processor, and that will not trigger a 1099K IRS form. Zelle payments are not subject to this law because Zelle facilitates messaging between financial institutions, but does not hold account or handle settlement of funds. So in the end, Zelle does not fit the definition of a third-party payment processor, such as PayPal or CashAPP or Venmo. Therefore, Zelle is exempt from the IRS reporting requirement. So Zelle is not going to report this transaction to the IRS, and the 1099K form will not be issued. To make this very simple, if you are passing money around for non-business purposes, if you're not passing money around for non-business transaction, then you don't have to worry about this rule. And technically, you should be good, unless there are some kind of reporting errors. But unfortunately, if you are making money from a side hustle, a freelance work, or from a gig, this is going to seriously affect you and your money. And it will affect millions of Americans. This new rule was supposed to take action last year in 2022, but the IRS said that the payment processor and the recipient were not ready for the change. It was too complicated and too close to the deadline. At the end of 2021, they decided to push this and delay it until 2023. And I don't think it will change again. Do you want to know why? Because the government always found a way to put their hand in your pocket and turn them inside out. Now, if you want to know how affiliate marketers are lying to you, click on the video that I appears on the screen right now. That is all for today. Thank you for watching the Financial Coffee channel, and I'll see you next time. Goodbye.